Imagine waking up one morning and realizing that one of the greatest stock market success stories of our modern era never came back. Think about Tesla. In 2022, the company suffered one of the most shocking stock price collapses in U.S. market history. Trillions of dollars evaporated from tech stocks, interest rates were rising, inflation was crushing the market, and confidence in Elon Musk was falling apart fast. Tesla dropped nearly 75% from its peak, and people were terrified. Now imagine if Tesla never recovered. Imagine if the rebound that investors celebrated never happened. The S&P 500 today would look totally different. Retirement portfolios would be reshaped. Millions of wealth-building dreams would crumble, and the entire electric vehicle industry might not exist the way we see it now. In this video, you will understand how close that reality truly was, and why this moment changed the future of investing forever. If you have ever feared losing money, struggling in the market, or questioning your financial direction, the answers you are looking for start right here in the next few minutes. Welcome to Crypto Brain Power. This channel helps beginners understand the stock market using simple language. Here, we explore financial history, market evolution, and long-term wealth building through real stories and real knowledge. Our goal is to make your investing journey smarter, calmer, and more confident. If you want videos on any other stock market topic, comment below and we will create it for you. Subscribe for more educational videos. Tesla's fall in 2022 was not an ordinary correction, it was panic. The U.S. stock market had just witnessed the shock waves from the Federal Reserve raising interest rates aggressively to fight inflation. Every time the Fed held a meeting, markets trembled. Every CPI report felt like a storm warning. Tech stocks were punished the hardest because rising interest rates reduced the value of future profits, and companies like Tesla depend heavily on future expectations. At the same time, investors were questioning Elon Musk's leadership as he was acquiring Twitter, which created fear that Tesla no longer had full-time attention from its CEO. While the S&P 500 was struggling, Tesla was collapsing even deeper. And here's the big question of today's video. What if, after all of this, Tesla never recovered? The first and most dramatic consequence would be investor psychology. For years, Tesla had been a symbol of hope. Robinhood users saw it as a life-changing opportunity. Fidelity and Charles Schwab portfolios held Tesla as a long-term growth engine. Small investors believed Tesla could fund their retirement or create generational wealth. If Tesla stayed down permanently, millions of investors would have learned the harshest lesson. Hype does not guarantee future return. The emotional damage would echo through the market for decades. The second consequence would be the collapse of electric vehicle confidence in the U.S. For many years, Tesla was not just a car company. It was the proof that the world could shift away from gasoline. If the 2022 dip never reversed, Ford and GM might have slowed down their EV programs. Charging infrastructure would have expanded slower. Venture capital money would have dried up. Countries investing in green energy would have questioned their direction. The third consequence, the U.S. stock market indexes would look completely different. Today, Tesla has a huge weight inside the S&P 500 and the Nasdaq. But if its price stayed low, Apple, Amazon, and Microsoft would carry an even heavier load. Amazon struggled during that same period, losing value as interest rates soared. If Tesla did not bounce back, tech leadership might have shifted permanently toward artificial intelligence companies instead of electric vehicle companies. There's also a psychological impact on long-term wealth builders. Imagine an investor who placed $10,000 into Tesla in 2021 at the peak. When the 2022 crash came, that $10,000 could have dropped to $2,500. At that moment, fear ruled over logic. Many investors thought about selling, and if the stock never recovered, they would have sold at a permanent loss. That outcome would destroy trust in long-term investing. But here's something powerful. Markets move in cycles. Tesla's story proves that even great companies experience brutal periods. Apple almost died in the 1990s. Amazon nearly collapsed after the dot-com crash. Netflix crashed multiple times. The reason these companies survived is simple: innovation and demand continued. So, if Tesla never recovered, one possible explanation would be that innovation at the company truly stopped. Maybe electric vehicles would not advance the way we expected. Maybe China would dominate the EV market, pushing Tesla aside. Maybe Americans would prefer hybrid vehicles or hydrogen technology. However, History suggests something very different. In every decade of American investing, companies with real products, real customers, and real leadership eventually find value again. It does not mean guaranteed success, but it means potential survives. The 2022 Tesla collapse teaches an important lesson. Stock prices are not the company. They are temporary opinions of millions of emotional people reacting to headlines, data, and fear. Tesla recovering did not happen because the market magically changed. It happened because revenue grew, production expanded, and global demand increased. The market eventually aligned with reality. If Tesla never recovered, long-term investing strategies would be questioned. Warren Buffett-style patience would be attacked. Dollar-cost averaging would sound weak. Holding stocks through painful declines would feel pointless. Instead, people would chase quick profits and short-term trades, feeding speculative behavior and hurting long-term wealth building. The United States economy depends on belief. Belief in progress, belief in innovation, belief in entrepreneurship. If Tesla remained permanently fallen, that belief would fracture. Investors looking at Apple, Amazon, or the S&P 500 would say, if Tesla can fail, anything can fail. And that mindset could trigger years of hesitation and missed opportunity. There is also something personal here. Investors do not put money into Tesla only for profits. They put in dreams. People imagine owning a home one day, sending kids to college, retiring early, helping their families. When a stock with that emotional weight collapses forever, it feels like those dreams collapse too. That is why it is crucial to understand this idea. Markets punish impatience and reward discipline. Fidelity accounts have shown that some of the strongest long-term investors are people who rarely trade. They hold strong companies and allow time to do its job. But at the same time, risk is real. No stock is guaranteed to recover, not even Tesla. Investors must study companies before buying them. They must prepare mentally for losses. They must diversify through the S&P 500, through index funds, through different sectors. That balance between hope and caution defines the U.S. stock market. If Tesla never recovered from the 22 dip, the lesson would be simple but painful. Future potential is not enough. Market confidence must survive. Innovation must continue. Leadership must deliver. That alternate reality could have reshaped the world, but instead, Tesla returned. It rebuilt confidence. It rewarded patience. And it reminded investors that the market is not a straight line, but a stormy ocean that only the strongest ships survive. So when you look at Tesla today, whether you invest or not, understand the meaning behind its story. Not every company rises again, but some do. And their comeback becomes a message for millions that intelligent investing is not about guessing tomorrow, but believing in decades. This video is only for educational purpose, not financial advice.